Hello and welcome everyone to another weekly market commentary from StashAway. Hello, Freddy, our Chief Investment Officer is with us again. How are you?
Hi there. Good to see you again.
Yes, good to see you as well. I do want to get almost right into it because we did have quite a few topics that you wanted to address in terms of markets, but we also got quite a lot of questions again, right? So let's see how much we can cover today. So let's get right to it. On the market side, right? Obviously, the big news was on Tuesday this week. Moderna showing some progress, right, on a vaccine. Maybe you want to start with that, and then we go a little bit more into the US-China relations that are brewing still.
Right. As you knew, late last night, results from Moderna's vaccine came in showing that in all of the test cases, they're able to produce neutralizing antibodies. As you know, the virus works through pathogens, antibodies, and if you can produce neutralizing antibodies, then there's a first step towards a vaccine. Again, like I said, it's a necessary step, but it doesn't mean there's no challenges in the next, right? In the next phase. Now, the good news is Moderna is about to be ready to start the final stage test on 30,000 people. So I think the market really liked this news. I mean, these days the market discounts a continual rise in the virus count anyway. With this sort of vaccine progress is taken very positively this morning in Asia.
Yeah, and I think, as you said, the final stage is 30,000 people. So I think the data from that will be very significant, right, in terms of where we stand on that. And just a question that I have follow-upping from this now that we've talked about it actually is, do you think the market prices a vaccine in, or will this have a huge impact the day they really announce, hey, we have this, the first 100 million bottles will be produced by February 15th or whatever date it might be, right? What do you think that will do to the market? I know this is guessing, but it's just interesting to think about that, right?
Well, the market has seen the prices set by Gillette. If I remember correctly, 5 doses over 5 days cost about, correct me if I'm wrong, nearly 2.8K, right?
Yeah.
It's fairly expensive. I don't think that level pricing is actually welcome because you need to distribute it very cheaply and very globally. So I just don't think the market is ready to accept that kind of price, right? Because spreading the vaccine around as widely as possible, as cheaply as possible is what supports the market going forward, the stock markets. Also, we are not factoring in that, the Gillette problem is that, it works in healthy patients already. Now, for the cases where people are less well and really needed an effective vaccine, even the Moderna's trial last night showed 3 out of 14 cases of a more severe dose, leading to severe side effects. So there's still a lot of challenges. And I personally think that we are a little too positive or here too early. So just calm down. Yeah. Take it easy, have a long time.
No, that's why I was wondering what your thoughts were on this, because it is quite interesting to imagine that day, right, where they actually say, hey, no, it's done, it's approved, right? So anyways, but we'll see how that goes. We'll be covering that in one of the when we get closer to it. But let's move on. I think the big thing again last week and this week is this rattling of the saber between the US and the Chinese getting much more intense right now, it feels like, right? Trump says phase 2 is completely out of the picture at this point in time, right? Lots of sanctions left and right. Maybe you can dig a little deeper what has happened and what that means also to the investors.
Just retracing the events. They don't really matter. It's very symbolic in nature, but there's a lot of tit for tat. So you have actually specific U.S. senators like Rubio, Ted Cruz. They have been officially sanctioned by China. So I don't think they care because they largely stay in the U.S., right? And they probably wouldn't be affected. But it is a posture, right? Trump does the same, officially signed a bill that ends Hong Kong's special trading privileges. It won't really hurt China, but really the victim from all this is really Hong Kong, because in addition to that, China just raised taxes, right, personal income taxes on Chinese residents working offshore to 45%, and the biggest impact would be in Hong Kong, right? There's already a lot of expats that's flowing out of Hong Kong, and there's a lot of Chinese expats still in the city. And now they're going to be slapped with a 45% tax rate. It's 15% in China. So that would really create another brain drain for Hong Kong. So ultimately, the losers here is just very specific to Hong Kong, but the broader impact is going to be very limited to other parts of the world, right?
Yeah, no, definitely. I think Hong Kong, it's already been a tough 2 years, right? So I think this is just culminating into tougher and tougher times ahead for them over in Hong Kong. The other thing, obviously, we've been hearing a lot, and it's all over the news channels, is this retail mania, right? I think everywhere you hear it. I think Monday of this week, 40,000 people bought Tesla stock on Robinhood alone, right, in one day. Retail, right? They might have just bought 0.02% of a share, whatever it might be, right? But this has been happening, obviously, in China before, right? And we've seen a lot of investors getting into, retail investors in China. What do you see there? How's the Chinese government, reacting to that? Or is there any cooling measures coming, you think, down the pipe?
Well, you see, when you look at China's broad indices, right, whenever they break a key level, it actually created more buzz than before. I know people you always say you want to buy low, sell high, but that never really happens. And especially in China, when the retail flow is easily 70 to 90% in between, right, of the volume daily in China. So it's going to be a very retail-driven, very volatile, a lot of flip-flop type of markets. Officials are clearly, I don't know whether they're clearly worried, but what happened was a lot of state funds, pension funds, state companies, they trimmed their stock holdings in China. That could just simply be a rebalancing act, right? The market has gone up so much in China stocks, and that you probably anyway need to rebalance between your stocks and bonds in the portfolio, right? I suspect that's a component of that, but the media has taken it as also like a cautionary signal from officials to the retail investors and say, don't go crazy. So I don't know which is the right version, but I think that's a good mixture of the two.
Yeah, no, I agree. Interesting topic anyways, because again, this rally has shown quite a lot of people stuck at home, right? And starting on their trading journey across the world, actually, right? But anyways, let's move on because we got a ton of questions. I will probably get only a couple. So sorry to everyone who we are not answering today. Freddy and I will move them over and roll them over to next week to keep these talks still very compact. But the first one actually we kind of already answered a little bit, but but he was asking, or the person was asking, many are saying that the equity market is getting further from reality, especially with recent China and tech stock runs, right? Stock completely outperforming the Nasdaq, right? Do you think it's part of market rhetoric, and how do you think that the market, or how do you think that the market has gone too far and the risk of a crash is more imminent?
I'll be brief here in the interest of time. Yeah. And if you just recall, very early on in the whole COVID-19 crash, StashAway's official position is a very clear one. We have said that the market is going to be disconnected from the real economy. And the disconnect is created by the printing of money by the US Federal Reserve. And the Federal Reserve, when they print money, every dollar they do is not just a dollar. It does circulate in the banking system. It multiplies itself over time. It's called a velocity of M1 money, which directly affects consumption. And that multiplier is 5.6 times, right, at the moment. So 2.3 trillion times 5.6, right? That's almost 7 months of US GDP. We locked down, 3 months, right? This is a big number. Of course, certain sectors, industries will be very long period of time be severely affected. But the fact that the printing of money comes in, right? Even airlines like Delta don't have to go to Congress to beg for money anymore, right? They can issue new bonds and the Fed will buy it. Even better, before the Fed buys it, fund managers bought it ahead of the Fed. So again, this is a piece of the modern day banking system related engineering, and is the reason why the market will disconnect from the real economy. We've said that from day one. We said that every week. We'll say it again now. It's going to be like that for a while. It's not to say that tomorrow we're not going to have a correction, right? 10-15% correction, a standard typical one, that can easily happen anytime. But the truth is, the market is going to disconnect for a very long time. We've seen it before. So I will move on to the second question.
All right. So second question was, since tech stocks have shown higher returns during this time, why weren't XLK part of the StashAway portfolio? Thank you again for whoever, I don't have a name here, but he's a longtime listener and he's joined StashAway quite a while ago. It's
a great question. And we actually think XLK should do well, but we didn't have it because we went to China innovations. But why? An example would help. Imagine you have $100, you invest in XLK, UX Tech, and it goes up by 40%. So your $100 US becomes 140. But because of the massive money printing I mentioned earlier to the first question, and we've seen in the past US dollar easily decline by 20% on a trade-weighted basis after that, right? This time could be even more because the money printing is more massive. So who knows what's going to happen? The risk of the US dollar is so high. And let's say there's 20% depreciation risk in the pipe. 140 times 0.8 is going to give you 112. So in the end, in local currency terms, based on, let's say you're a Singaporean investor or Malaysian investors, right? After the dollar depreciation, you may just be making 12% in return. That you can also flip it around and say, wow, I just need to make 12% in return in another asset class in the region, less interesting, and I will be equal to the spectacular return in the US technology. You can also think of it that way. But better still, we have China Innovations that's done similar numbers to XLK, right? And without the currency depreciation.
Okay. No, that's a good explanation of why. Thank you, Freddy. I'm sure the person will be happy to hear about this from you directly. With that being said, again, for everyone else's questions, we'll move them over to next week. Just want to get one thing off my chest still. We have a couple good webinars coming up again soon, sorry. The first one is in Singapore next week, 22nd of July, 7 p.m. We will be talking about financial planning basics. And for Malaysia, we will be having a webinar as well on the 23rd of July next week, and it's going to be about how to plan for your retirement. So if you're interested in signing up for any of those, visit our respective websites. You can also find the links in the show notes below. So either one. We hope to catch you at one of our webinars, and otherwise, Freddy and myself will be back next week. Have a great day and great rest of the week. Bye-bye.
Ciao.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.